Welcome back to another episode of Borak Bersama Maybank. This time, we're taking a step back to discuss the prospects of Malaysia from the lens of an economist. Joining me today, we have another returning guest from the first season of Borak Bersama Maybank, our Group Chief Economist, Suhaimi Ilias. Welcome back to our show, Suhaimi.
Thanks, Najib, for having me.
Since Malaysia's transformation from a commodity-based economy to a manufacturing-based economy in the late 1980s, we have seen two rounds of investment upcycles. The first round was in the late 1980s and the pre-Asian financial crisis AFC in the 1990s. And the second wave was the post-global financial crisis, the GFC, i.e. in 2009 to 2013, when the government back then launched a new economic model, NEM. So based on your report, it states that we may be on the cusp of seeing a third wave. In your opinion, are there macro impacts that could repeat from the previous two cycles?
Well, to put things into context, we measure investment upcycle by looking at investment's share of GDP. In the first upcycle, the ratio surged from 22% in 1987 to 49% in 1997. The second upcycle raised total investment to GDP share to 27% in 2013 from 22% in 2009. And we believe Malaysia is currently on the third investment upcycle as the investment to GDP ratio picked up from 19.7% in 2022 to 21.3% as of first quarter of this year. Our review of the impact on the key macroeconomic variables during the earlier two investment upcycles showed several key trends, which offers perhaps some clues or guidance on the potential economic impact of the current third investment upcycle. First, we have GDP growth picked up and the momentum was sustained for virtually a decade. During the first investment upcycle, GDP growth averaged 9.3% per annum between 1988 and 1997 after the economy got out from the 1985 recession. During the second investment upcycle, GDP growth averaged 5.4% per annum between 2010 and 2019 after coming out from 2009 recession triggered by the global financial crisis. Because investment upcycle involve activities like building infrastructures and factories with positive spillovers to properties and real estate, construction sector posted multi-year double-digit growth, averaging 14.4% per annum in 1989 to 1997 during the first investment upcycle, and expanded by 13.5% per annum in 2012 to 2014 period during the second investment upcycle. And to note, construction sector GDP surged by 14.5% in the first half of this year. Third, we saw above trend growth in consumer spending above 6% as investment upcycle boosted employment and income. And fourth, we noticed ringgit tends to appreciate against the dollar during investment upcycle periods. In the first investment upcycle periods, we saw ringgit gain by as much as 14.8%. And in the second investment upcycle period, ringgit appreciated by almost 27%. Currently, ringgit is on an uptrend as it closed at 4.43 versus the greenback on 13th of August, up 8.4% from this year's lows of 4.80 on 20th February 2024. And our FX research team is currently forecasting ringgit dollar of 4.45 at the end of this year and 4.20 by the end of 2025.
So in one of our previous episodes, we've touched a little about the potential private investments here in Malaysia. So our head of retail research, T, mentioned that MITI is expecting to see a 5% growth from last year's approved FDI figure of 330 billion ringgit. Now, I believe that what we mentioned previously is just only scratching the surface. Could you highlight and explain some of the themes that can help us achieve this growth figure?
We see 5 drivers or themes in current wave of investment upcycle, i.e. green, technology, Johor Singapore Special Economic Zone or JSSEZ, infrastructure, and government linked. Green investment is essentially driven by the National Energy Transition Roadmap, or NETR, where the energy transition financing needs implies projected total investment of 1.2 to 1.3 trillion ringgit until 2050, together with Sarawak's push to be the country's renewable energy and green technology hub. Investment in technology industry is at the heart of the new Industrial Master Plan, or NIMP 2030, with the National Semiconductor Strategy, or NSS, as a key component that aims to bring in 500 billion ringgit worth of investment in the higher-end semiconductor industry over the next 5 to 10 years. And another area of key investment uplift within the technology space is data center, where we estimated 130 billion ringgit worth of investment in 2024 to 2035. Amid excitement on JSSEZ, Iskandar Regional Development Authority, or IRDA, aims to attract investment worth 226.5 billion ringgit into Iskandar, Malaysia, which is the core or the heart of JSSEZ. And this is for the period 2024 to 2030. We also see and expect a busy time in the infrastructure space ahead. That is also to support the green technology and JSSEZ investment push. Lastly, there are also higher domestic investment by government-linked companies and government-linked investment companies, the GLCs, the GLICs, who have committed 440 billion ringgit into domestic capital markets and 120 billion ringgit into domestic direct investment over the next 5 years.
Okay, thank you, Suhaimi. I guess for our audience out there, I mean, it's this upcycle of the third wave is it's, you know, the optics are there. If GDP picks up, construction sector booms, and obviously there is an investment upcycle. So thanks so much, Suhaimi. Aside to the audience, if you're interested to find out more on what stocks you can invest in these themes, check out our latest Borak Bersama Maybank highlights video on the JSSEZ and thematic topics posted earlier this week. But if you want to know more about the macro landscape, you can catch Suhaimi's latest macroeconomics report and many more trading ideas on the all-new Maybank Trade MY app. Remember, if you do not have a CDS or trading account, you can apply for one online in just 3 minutes via the QR code on the screen now. If you need more personal touch, you can also approach our sales representatives and they can help you get started on that as well. With that, we'll catch everyone in the next episode. But until then, this is Najib signing off.